Hello, welcome back. It is Thursday, July 29th. We're gonna look at the stock market. We're gonna talk a little bit about GameStop and talk about just a couple of little things that came out. I thought were interesting. Sub up, like up, comment down. Happy money sticks around. We're still waiting on this GameStop squeeze. We've got a lot invested, so yeah, we're pretty focused on it. The market today, it's in this consolidation, just kind of a tight consolidation. We actually did make all-time highs today, so that's exciting again. And now it's bullish on the hourly, so I expect it to keep melting up, honestly. I don't have any plays on it, even though I probably should. But yeah, it's pretty far above its 9 moving average here, so it might come back down a little bit tomorrow for Friday, or it could rip. Honestly, it's just kind of hanging out in this no man's land at all-time highs once again. Signs of reversal. You could say there's an RSI divergence right here, but yeah, it likes to do at least 3 of those, which actually did right there. That's true. So there's 1, 2, and then 3. This one lower? Let's see, it's 63.44. This is 64. No. Yeah, it's not a very strong one. So I expect it to just keep melting up. GameStop today, like I said in the last couple days videos, it looks like we just kind of found this range that we'll be trading in. Which is good. We're consolidating as well. We had all that volume yesterday, I think, from us entering the S&P 400 and leaving the 600. I've seen different reports on it's going to cause selling of GME to facilitate the transition. I've also seen reports of massive buying for it, so I haven't looked into it too deep. I'm just kind of waiting for price action on the charts. But today's volume is much lower. Got about half an hour left, and we'll probably break 2 million, but it wasn't like yesterday's. But anyways, we're good. We're trading the range now. As long as we don't break below this 158, I think we'll stay in this floor, kind of this 190-ish ceiling and this 160-ish floor. So MACD so far has crossed over bearish on the day. Day's not over, but and these candles are below the 9 moving average, and these are red. So these indicators are bearish. So one could say it's bearish outlook. However, when you see this bottom here, and then it bounced off of it, and it hasn't broken that bottom again, and it's looked like to me that this is a support that it's found. So these indicators are showing bearish, but the fact that we have a support here that is hasn't been broken, and it's looking strong. And today, and maybe even yesterday, these are maybe the new lows. It might be making higher lows on this consolidation, or not. We could come down even lower tomorrow. It probably will, just because of the other indicators showing that it's bearish. But at this point, I'm not expecting it to dip below this 158. We'll see though. If it comes down to 160, 159, I'll be watching it really close. That'll be very interesting to see. But yeah, I mean, MACD is bearish, candles are bearish on it on the daily still, but we're looking all right. If we look back here, I'm gonna probably assume now that we're in this 2-week range. So we're not here because we've kind of already passed that point. So I would say probably 2 weeks out from now, and I'll show you how I got to that. At least for a run up. I don't know about a squeeze or anything, but if we're following the same pattern, which we're not following it, but the shorts and those that are stuck in this hole that they keep digging, the pattern they have to follow, I think. Unless if new rules have changed that to where they don't have to anymore, which seems kind of counterintuitive, but it's possible. So if you look back here, we crossed bearish on the MACD. So even this day, we had a big red candle under the 9 moving average, which is bearish, and a bearish MACD. And then the next day, we even came down further. However, look, that was a higher low than this one. So that's what I'm saying. As long as we don't break that low, I think we'll be fine. I think we'll be consolidating. And we could be right here. Today could be like this day. And then we have a couple more of these. But yeah, so this kind of swung bullish to bearish and then back to bullish, and we're kind of seeing that right now. So I'm not sure how long it'll go on. If you look at the time though, we'll just say this. So this happened, this big drop happened on the 15th. And then if you look up to the next 15th, it was basically 2 months from there. Roughly 2 months. This is the 17th where it was basically fully bullish trend, big green, and then had an upward trend from there. So if you count that, we've got gotta turn my jazz up a little bit, man. It's crazy. Too quiet. We got the 10th here, and so basically two tenths from there, 2 tenths from there. That'd be 7/10 and then 8/10, which it's kind of a rough day. I don't know about holidays and stuff in there, but that's 2 Tuesdays from now. If it is following that cycle, that's, you know, that's right up here. So we'll see. Next week there is pretty big news with the Ethereum and the London fork and all that being activated, and possibly what GameStop will do with that news, as well as the moving into the new S&P 400. So those two things could be catalysts for something, and it's possible those are catalysts, but we won't see the fruit of that until the next week. I think the fork thing, let's see, that's on the 4th. I believe they're both on the 4th. So may the 4th be with you, pretty much. No, so it might be, it could be the end of next week, or again into the week after, where we have that 10th, where it'd be basically 2 months from that big drop, we start to have a run up. But yeah, we're still looking good. The 9 moving average on the daily is still over the 180. You know, this is still a very bullish long-term trend up if we're looking at it in that longer period. On the weekly, it's ugly on the weekly, but that's because we're still kind of consolidating. It's not ugly. It's higher lows and higher highs. This right here, where it's red under the 9 moving and the MACD crossing over, that doesn't look good. But this is a huge time frame that, yeah. So there you go. On the monthly, it's nice solid floor you can see on that moving average. Really just building up nicely. So, and that's what we see here on the daily. If we were to start breaking through supports, I would wonder what was going on. Maybe get excited for it being a Volkswagen dip, but I don't know. I don't know if we're gonna break through the support. We will see. But yeah, it's good that the 9 is over this 180, just like it was back here. It got pretty close before it ran up, and we're getting pretty close to it now. I don't know if I can even see, like, there's a measurement, but I'm sure there's a way to measure that. But yeah, you can see the 9, and oftentimes the 9 will bounce off the 180, or even candlesticks price action will bounce off of moving averages, as you see kind of here. So as we're coming up, as this moving average is coming up, if we stay flat, it's going to kind of flatten out, but they will also get closer together. So we might see that where it kind of bounces off of that. Yeah, so on iBorrow, they borrowed shares. Oh, and looks like they made another 200,000 shares to be able to borrow at their leisure. Borrow at your leisure. So they might borrow some more and short it some more. Really just to counteract probably a lot of buying pressure that we're still seeing. Fidelity still shows like 7-to-1 buy ratio. That's not overall share buy ratio. That's, I believe, orders. So if I bought 1 share and someone else sold 1 share, that's a 1-to-1. And if I bought 2 shares and someone else sold 1 share, that's still a 1-to-1 transaction, if you know what I mean. So I think it's showing more that retail is still buying it when you see those Fidelity charts on Reddit. Because the 7-to-1 ratio or whatever we're getting, that's buy to sell, a lot of the buys could be a lot smaller than the sells. Sells could be, 100 or 500, and the buys could be 1 or 2, and it's still a better ratio if you have more transactions on the buy side. So it's still good news, but it's maybe not like, oh, this is clear evidence that it should be going up, because it's not, I think, overall shares. I want to show you guys this, which was interesting. It's not on my Webull app. but someone did share this. This was shared by Exordium. He's got the Webull app here, and his chart actually looks different too. I think he's maybe using that like the Japanese one, the Japanese candlesticks or whatever it's called. I know it's not called that, but and maybe that's the difference. I'm not sure, but he has the new update up here with it showing eyes, like kind of basically people watching this ticker. And maybe this is just photoshopped or something. I don't know, because I don't have that on mine, and I checked to make sure I had an update. Maybe because he has level 2 actually. I only have level 1. If you have level 2 Webull, let me know in the comments if you see this. But this is showing GME has 1 million people watching it right now, which is crazy just in and of itself. 1 million people watching it on this one Chinese platform on an app, which is insane. I'm sure this isn't desktop also. This has got to just be the app. And it's a Chinese broker. It's a very small broker. It's not like it's not very small, but you know, it's pretty interesting. So just 1 million in itself is pretty crazy to me. But then he compared it to these other ones. The SPY has 109,000. That's insane. That is insane. I mean, the SPY, come on. And then Robinhood's IPO has 43,000. So yeah, I'd like to find out more about that. If you guys see that, I'd be curious. Maybe you have to have level 2 to have that kind of data, that kind of eyes-on data. And one other thing, the SEC, Gary Gensler, he had a tweet out. About 6 months ago, stock went from $20 to $480 and went back down to $40 all in a matter of weeks. I think these events are part of a larger story about the intersection of finance and technology. I think it's good that he's, I guess, acknowledging it. His wording, of course, can't be, there's a lot of corruption and I'm going to get rid of it. First of all, that's not really the SEC's job, I don't think, to get rid of it. They kind of, we won't get into that, but they can be doing something. But anyways, when new technologies come along, so he's kind of giving a broad picture of it. I think it's good that he's making it something, making mention of it, even though if it's not like directly the right thing, I guess, on what he's saying. But that's good. And then all the trending of the dark pool trending and all that, it's good. Eyes are getting on it. It's people are becoming aware of it, which is that is what is needed. Real quick, I'll show you the bloodshed we've been going on with our options and our shares. I closed out of that put credit spread. It was quite difficult, and I think I made money on closing this one out, but I'd already rolled it over. For like a $8,500 loss, unfortunately. And then this one, I think I made maybe $1,000 on it to close this one. So I'm down on it overall, but I'm out of that play. And I guess I have more of these now that I legged into. That was just for margin requirements. So we have these puts that we sold, and I guess I'll be rolling these over at the end of the week, unless if GME comes back up. And then this one put I bought that I still can't sell because of margin requirements, I believe. Yeah, so that's unfortunate. I guess I could maybe buy like really far out the money puts and then be able to sell this. That maybe be smart, I'm not sure. But yeah, our shares of course are down everything. I almost sold covered calls into today, but the premiums are small. I'm gonna chill on it and roll over and wait for all this to happen. So that's what I got for you guys today. Very simple, straightforward. Not gonna, no other stocks really to talk about for me today. It's pretty boring. Psychologically today kind of sucked for me. And just sometimes you start questioning yourself and what am I doing? What's this? What's that? So I'm just trying to be patient. SPX, but yeah, I would close out of the SPX because those expired worthless. And that's the credit spread we sold or closed, bought it back. SPY, I mean, maybe I'd say take long positions on it. I should, but I just don't trust it up here. So it might just keep melting up. Who knows how long it'll do this. This MACD is just flattened out up here. The RSI is just pinned at overbought on the weekly. which is crazy for it to be like that on such a long time frame. This was the COVID crash. You can see back here, just, you know, it was way overbought then, but didn't last very long. So anyways, thanks for watching, guys. See you tomorrow. Peace out.